Hi, I'm Brendan Beer, Lead Portfolio Manager for Oaktree's Asset-Backed Finance Strategy. I'm joined by my colleagues, Larissa Nazarian, Assistant Portfolio Manager, and Jennifer Marquez, Head of Strategy and Structuring.
How should we think about asset-backed finance? Well, in essence, asset-backed finance can be simplified to the business of lending to lenders. It's a form of private credit backed by pools of contractual cash flowing assets. So think loans, leases, mortgages, receivables, broadly diversified across sectors. In asset-backed finance, we're financing Main Street rather than Wall Street. It's a multi-trillion-dollar market that really touches the breadth of everyday life. Everything from the car you drove in today to the credit card in your wallet can potentially be financed by asset-backed finance. So we're providing the fuel to keep our global economy moving. Now at Oaktree, we've been investing in asset-backed finance and traded structured credit, the public version, for over 2 decades. But we're very excited about the emergence of what we believe to be a significant private performing credit version of the opportunity.
We believe one of Oaktree's biggest advantages in ABF is the breadth of our team's expertise and diverse sourcing and origination model. We work with hundreds of third-party, unaffiliated originators. We don't need to rely on platforms owned by Oaktree and are cautious around the potential conflicts doing so creates, leaving ourselves open to a much broader range of opportunities without diluting value. We've partnered with, invested in, and even built origination businesses across sectors. That experience got us close to the assets and gives us unique insight into how collateral performs through cycles, how to align incentives between parties, spot headwinds or tailwinds early, and most importantly, pick the right deals and leave the bad ones out. Deals that offer attractive returns, strong protections, and alignment between parties. Today, we see core ABF as a natural evolution. It's lower complexity, higher quality, and relatively uncrowded, precisely where we believe Oaktree can add the most value for our clients.
That's exactly why we see ABF as the next chapter in the private credit story. We've seen this pattern before. After the global financial crisis, banks pulled back from corporate lending and private lenders stepped in. Today, the same thing is happening in asset-backed finance. In response to quantitative tightening, toughened bank regulations, and less reliable deposits, banks are shrinking their footprint in ABF. So from a bank's perspective, if a potential lending opportunity doesn't also attract deposits, generate fees, the bank is going to be less excited about that business. So banks want to be in the moving business, not the storage business. So this is creating a universe of investment opportunities, but for non-bank lenders. Insurers and managers focused on investment-grade ratings, they're stepping in to fill some of the void left by retreating banks. However, much of the ABF opportunity just doesn't align well with the one-size-fits-all investment structures that are demanded by rating agencies and insurance regulations. In ABF, we're finding many borrowers are looking for a capital provider who can be both commercial and adaptable. We see reduced competition in this unratable area of ABF, and it's precisely where we're finding compelling relative value with strong downside protection. For our clients, this means the chance to capture attractive spread premium with risk under control, and we're bringing 20 plus years of ABF experience to this wide open opportunity.
We are bringing the full breadth of Oaktree's asset-backed finance platform, our differentiated sourcing and origination relationships, and decades of experience to build a richly diversified portfolio with strong downside protection